Hello and welcome to the market update for Tuesday, May the 4th. We seem to be getting a little bit of a pullback today in the market, mostly in the Nasdaq. The Dow has kind of rebounded a little bit off its lows. We'll take a look at those charts here in just a second. There's not a lot of, although we got a little bit of a spike in the VIX, it really doesn't feel like there's a lot of fear in the selling, and we have come off the lows of the day, and so it just makes me wonder if we are going to get a little bit of a deeper pullback, or if this is just going to bounce right back again. The reason why I'm a little bit mixed on this, we're going to see right here in the direction alerts, is that we're not really dealing with an extreme, a real extreme overbought condition. There are some overbought signs. If we go down, you can see that momentum is off the extreme. In fact, it's almost in the hold range. Breadth is in the extreme range. It's been there for the last couple of updates. So that's flashing kind of an overbought type condition. Momentum though is it's high, but it's not extreme. But as I've talked about many times, you can get a high. You don't always have to get to the extreme range with sentiment. So there's a few mixed signals there, and that's why I did short a few things on Friday, or actually Thursday, with what looked like a bearish reversal. I think I talked about that in the stock specific class. Not heavily, but just a few things that have paid off a little bit today with today's drop. But I got out of a lot of them just because I could see the market snapping right back. A lot of times when you see a sell-off like this, one of the first things I start to look at is kind of what is the trigger, and is there some headline that everyone's really talking about? And there's some different things that people are discussing today, but nothing that's kind of everyone's talking about. And that's usually when you have something that might be a little bit bigger that could cause selling to increase. So a little bit of a mixed signal today. If we look at the buy-sell ratios, we're a little bit wide, but again, not overly extreme. Sentiment is not near its extreme level there. It's just something you normally see. You see it up there around extreme when you know the market is overbought. Now, it's fair to say the market doesn't have to sell off, or it doesn't have to. It could sell off when it's not overbought. It doesn't have to be overbought to sell off. But if you're talking about deeper correction, that's usually what you'd like to see, because that's what kind of fuels the additional selling, is that people have pushed things up pretty far. If they just push things up an average amount, you can get a pullback, but it's probably a pullback day or two where it comes down and goes right back up again. And that could be, and that's kind of what I'm looking at today, is could this be a little bit of a buy the dip type of day? That's what I'm trying to kind of figure out today. I might need to wait a little bit closer to the close to see how things are going to have closing the day. Do we rally up off these lows quite a bit into the close? That might tell me that we could move up. We might snap right back, and I'll show you the individual charts of the indexes as well here in just a second. If we look at the buy-sell ratios, you have what looks extreme to me is the transportation stocks, 12 to 1, 12 buys for 1 sell. That's a little extreme. When you start to get in that double digits. Russell 2000 though isn't too bad. It's not really showing extreme overbought. Neither is the Nasdaq 100. Dow Industrials is getting a little bit high, but it's still not. You're not in near those double digits yet. So I'm not seeing a real extreme on the index buy-sell ratios there. Let's take a look at the individual charts. Now, last Thursday was that hanging man candle formation. Now, basically, that candle formation has already fulfilled what it's designed to do. Candlestick formations are very short-term. Most of them are very short-term indicators. That's why we don't want to draw long-term conclusions with just a candlestick formation. Where we can draw longer-term conclusions is when we have a candlestick formation that's lighting up with another chart pattern of some sort. You get a kind of a head and shoulders or an inverse head and shoulders pattern, and then that's indicating a longer term movement, and then you get a shorter term candlestick formation that's confirming that that move should start right now, and you have a pretty high probability trade. Here we had just a hanging man candlestick formation, and the market did pull back from that. It was, you weren't quite sure if it would on Friday and Monday. It tried to rally a little bit there, but today it did kind of follow through and drop. You see kind of a similar one that happened a couple weeks ago where you got a little bit of a drop. But again, those were short term. And one thing I'm kind of keeping an eye on here on the SPY is this little support level right here. You notice that that's kind of where the intraday low hit today. And then we bounced off of that a little bit. Now, if we kind of close where we're at right now, I'd still say the market should at least open lower. It may open, gap down to that support level, and you can see what it does at that point. Does it start rallying off of it, or does it break through it? If it breaks through this level, though, you could be in for a much bigger correction. The next area you'd look at is back down in here. So, and this is where I can be absolutely useless as a commentator. Is basically what I'm saying is this could either be a shallow correction and we're going to bounce right back, or it's going to be a deeper correction and we have a lot further to drop. Well, that doesn't help you that much, but at least I can show you where you would know what's more likely to take place. If we break the support level, you're much more likely to be working your way down here. Now, it doesn't mean you'll have a straight shot down there. You could break this level, have an attempted bounce where it tries to rally back up. In fact, you would expect that at some point, and then finish out. That's what creates that ABC pattern. You have that initial sell-off, it tries to bounce, and then it comes back down. Could that happen right here where it tries to bounce off of that support level and then drops? Absolutely. It could be that we try to rally for the next couple days and then we fail. Because remember, you had that bearish reversal and then we tried to rally off of it. And on Monday, what really was bearish on Monday is you had that situation where the market was up, right? We closed it at least the Dow and the S&P were up, but it was the price action of that day. We opened higher, we closed lower for the day, but still higher than the day before. That's why it showed that we were up for the day. But that's why you should stop paying attention only to the closing results. You have to look at the candle to see what the price action of that day was, because just because we were up doesn't necessarily mean that was positive or good for the market, or because I'm telling you that was screaming that we had a pretty high probability of dropping today. And if all you were going off of was the fact that the S&P was up and the Dow was up, you might have just been aggressively buying just because of that, and failing to see the signal that was telling you that wasn't a great rally yesterday in the market. It wasn't going to close higher than where it opened. So that's going to be a key area to look for. When I look at the Dow chart, I mean, I thought it was going to maybe push higher. I thought maybe we might get another day like yesterday today, where the market, although it was weak yesterday, it attempts to rally, but it's fractured again, where the Dow has another outperformance day, and the NASDAQ and S&P are maybe flat or down. So this thing could break out. But I mean, you're right in the sideways range, and you hear me, I've talked about this for the last couple updates. It could drop from here, but I call these volcano tops. If it does drop, it would be a volcano top. Volcano tops are rare. That's my term I use because it creates a top that looks like a top of a volcano. At least how we depict most volcanoes. But there's also a good chance it has one more push where it breaks out. Now, if it does break out, I wouldn't expect it to go very far. Kind of clear this area here, and then drop, similar to what happened in the S&P. So if we go back to the SPY, that hanging man candle that formed last Thursday broke out of this sideways range, and it came right back down. We might see something like that with the Dow. Now the Dow's rebounded the most of the other indexes today off its lows. Dow was down, I believe, almost 300, 280 points. I think almost 300 points at the lows. Maybe it's a little bit less than that, but it's come back quite a bit. Yeah, it still could be possible that it has that attempt to move higher. I think one thing that's important to note, especially as it relates to last week, is we had a week where most of the big tech companies, the kind of FANG stocks, some of the major FANG stocks reported earnings. And most of them reported great earnings. We had a Fed meeting where the Fed is still not talking about raising rates. And countless other kind of bullish news that came out. The market should have been up 5-6% off of that. In most circumstances, that news breaks, and I mean, what are the reasons there to buy when you get stuff like that? But what happened? We didn't move up at all. Well, barely. We kind of had this little bounce right here, but we didn't take off. Now, this ties into what I've been talking about for the last couple of updates, which is one thing I've been noticing, which is we're out of buyers. There's no one left to really push the market higher. And when you're in a situation like that, what that tells you is that it means that if there's any negative news that breaks or comes out, the market could really sell off hard on it. Now, like I said, today, there have been, a few different things talked about, but nothing I see is any sort of major reason to sell. And I think that's another thing I pointed out a few times is that these big institutional traders need a reason to sell. If they just start selling right now just because the market because there's a lack of buyers or whatever, and the market isn't rallying strongly on good news, if the market kept going higher here, they're going to get fired because their managers are going their supervisors are going to say, "Why were you selling? Why were you selling? There's no reason to sell." So they've got to have kind of something to pin it to as a reason why they sell. And what I've been trying to teach you these last couple updates is that the conditions are there. The fire is ready. The gasoline is on the fire, and it's just waiting for that match to light it. We'll see when that happens. That's the thing that makes me feel helpless in doing an update like this, is I can't tell you when that could be, and who knows? It could be that it stretches out just a little bit farther. We do get a little bit of a bounce off of this. The Dow maybe breaks out, and you go a little bit higher, and then everything starts over again. We might be talking about this and these conditions for the next 3 or 4 updates. It's possible that could happen. And this is where the patience comes in, though. You have to just kind of realize that sometimes you'll get these conditions in the market where things are moving, and there's times where we're just sitting tight and nothing's really happening. And that's what's been showing us for the last couple of weeks, that we've been moving sideways, not going anywhere. And it's just a matter of when that kind of breaks. A lot of times the market will do that, though, and you know what it's waiting for, an election or something like that, or there's some event that's coming up that the market is really waiting for. Really there's nothing this week except for the jobs report that comes out Friday that might be some sort of a trigger one way or the other. But I don't anticipate that the jobs numbers would be bad. We've seen a lot of growth, but maybe you see a slow of growth in the jobs numbers that freaks the market out. You just never know what that'll produce. But that's really the only main trigger that I can think of off the top of my head that could start something this week. Qs, you can see we had the big drop today, but before today's drop, we were dealing with kind of the same thing. But this can show you that we could drop from here. We could see the Dow just start dropping from here. The NASDAQ did. I'd want to see, do we hold these lows into the close? If we come off the lows quite a bit, that could be a short-term bullish signal that we're, market, there's enough dip buyers right there that they're going to push the market a little bit higher, or could rebound the market a little bit the next day or so. But that's not always the case too. Sometimes when you get these little moves off the bottom, one of the things that you want to look for a lot of times, and we're actually going to spend a little bit more time on these candlestick formations and some of the trainings coming up. But when you get these tails, it's not just coming off the lows of the day, but you want to, the close is obviously pretty important as well. Do you close higher than where you open? So, this day right here where we came off the lows of the day is a stronger bullish signal because it closed higher than where it opened. Whereas this one right here, it came off the lows of the day, but it didn't close. It still closed lower than where it opened. So it's not a very strong bullish reversal. It shows you the buyers came in, but they weren't strong enough to push it all the way back up. Now here they were able to push it all the way back up and close it higher, but it didn't last very long. So context is important with this. Usually if you have a drop down, here's kind of a short one where it dropped down, came off the lows of the day and closed higher than where it opened. Here it closed higher than where it opened, but still lower than the day before. So it showed a down day right there, but that was actually a bullish reversal candle. And you did get a little bit of a bounce off of that. Now, what's interesting about the Qs is if I try to take a look at where the next kind of support level is, it's down around here. That's pretty close to the lows of the day, but I could see where maybe we close somewhere in this area right here and then open lower, maybe even gap down to this area. We do gap down. You'd want to look to see if it was gapping down to this area because there's definitely some support there. Beyond that, you come down to these next levels here. If it's a major correction, it's probably coming all the way down to this low right down here. But it's hard to tell right now. Russell 2000, again, we pointed out this head and shoulders formation. We did rally up to that area of that left shoulder, right shoulder, rally up to that area of the left shoulder. Now, if this is a true head and shoulders pattern, minimum, it's going to come down to here, but it's probably going to break below that. But there again, could we see the Dow break out and the Russell come rally up and retest this high? Could it bounce around here a little bit before dropping? Yeah, it could. And so again, that's what makes it difficult in the short term, knowing how this plays out. It'd be a lot easier if there was like I said, a major news event today that the market was really focused on and really high volumes on the selling. The volume should end up being high today, but not not that kind of panic type selling. At least I haven't seen that yet. Bonds, we did see bonds start to rally a little bit here, and we do have a case where we had maybe a higher high right here, and possibly this is now looking like a higher low. So it's acting like a little bit of an uptrend. Now, you'd like it to clear. Here was a lower high right here that it kind of barely cleared on this intraday move right here. I kind of like this higher up here to be a stronger indication of a trend reversal in bonds. because it was a more distinct lower high right there. This is a real shallow one right here. But, if this continues to move higher, breaks to a higher high right here, it gets above this high, you really have to start looking at a possible trend reversal in bonds. But it's definitely looking like it could be transitioning from a downtrend into an uptrend. Now that could be interesting as well as it relates to the overall market. As you can see, bonds in the market don't always move inversely. They haven't been. They don't always move inversely, but there's a tendency for them to move inversely, because a lot of times what's happening is when the markets sell off, those big institutional traders need somewhere to put their money to make some return. They're not just going to put it in cash or leave it in cash. So they have a tendency to put it into bonds, and so there's a tendency for bonds to rally. But with bond yields on the rise, it's really caused bonds to keep dropping, but they haven't been attractive to and the market's been kind of chugging higher, so there's been no reason to move money into bonds. There's been a much bigger outperformance in the market. So, but that is something to keep an eye on. If we do get a strong enough sell-off where these fund managers, they got to park it somewhere, they're going to put it in the bonds, you could see the TLT bonds start to rally or have some sort of a rally. Longer term, though, it's still viewed with inflation. The Fed's commitment to rising inflation, and for those bond yields will likely go higher. It would probably just be a shorter term rally, which means we could, rally up a little bit. In fact, let's take a look at a little bit of a longer term view. You see how far bonds have dropped. You could see a 50% retracement of that and still have it roll over. Here's a lot of support resistance in this area right here. There's also some right over in here, so maybe you get a rally up into this area, and then it rolls over and continues to go lower. But I think that's worth paying attention to, because if we are seeing a turnaround in the bond market, if we are seeing a rally start to begin in the bond market, that could be another signal because what's causing that? Well, it could be that fund managers are taking some money out of the market into bonds. Not in a panicky way right now, but slowly, that could be an indication that they're worried about a little bit of a pullback taking place. Could be a little bit of a signal. Remember, what our job is technical traders, is we're trying to just read what we think the big institutional traders are doing and try to follow along. And if they're shifting money into bonds, it could be a sign that they're thinking a little bit of a bigger pullback could be coming, and we could be prepared for that. Gold, I thought gold was starting to rally yesterday. We have seen higher high, higher low. There's a little bit of a higher low right here, then a more distinct higher low in gold. Here's a previous high, lower high on the way down that I pointed out a couple times to pay attention to. It looked like yesterday today we were probably going to break out to a higher high right here, but we dropped. Now, it still doesn't mean that gold is going to drop from here. But that's what I would pay attention to, is does it clear this, go to a higher high, and does it clear this high right here? If it does, we could be thinking the same thing with gold, is that it might be at the very least in a near-term rally. It's acting like a little bit of an uptrend right now, so not a real strong uptrend, but that can change very quickly. So we'll keep an eye on that and on its possible transition there. Oil, it was starting to kind of break out today, but this is going to be one of those where it could end up being up compared to the day before, but lower than where it opened. That's kind of a bearish signal. It happened right here the last time it came up to this breakout area. Same thing happened. It dropped off of that. Maybe, we'll see if the same thing happens here, although this one's kind of cleared that breakout area. It seems to be holding today right at it. We'll see if that holds. But the fact that it has kind of broken out a little bit higher, and it's kind of has some higher highs, higher lows through here, that would be a little bit more bullish for oil, because it's kind of cleared that. It's gone to a higher high. Even if it's just an intraday high, it's cleared. It's gone to a higher high. So yeah, I'd still say that the trend on oil is bullish here, and it looks like it should continue. Another thing you'd look at is you'd want to look at the extreme reversal risk. We have entered the extreme reversal risk, but we're not past the halfway point yet. So this is saying that the trend is still up, but it's not extreme yet. So it has room to keep going higher, but it is getting pretty close to getting into that real extreme range, the far right side. And so it might not have that much more room near term to run before possibly correcting. But that's the overall conclusion here, is that the oil looks to be still in an uptrend. The dollar had a little bit of a snapback. We've concluded last update that the dollar was in a downtrend, broken to a lower low. Now it's attempting to rally. I would expect that this rally will roll over and you get a lower high. So I still believe the dollar's in a downtrend. This is just kind of a correction within the downtrend, a little bit of a rally or a step within the downtrend. And then lastly, the VIX. You'd see the VIX spiking up a little bit today. And that's something to keep an eye on. Is we've seen a lot of these one-day spikes and then they reverse, and that's another reason why I'm not really strongly bearish today. Now that can come a lot of times with some sort of news, but I'd like to see another day. Really, tomorrow's going to be key, because I think if we see a continued selling tomorrow, we start breaking these support levels I pointed out, and we see another day where the VIX spikes up, and maybe even dramatically, then I think we can conclude that maybe a bigger correction is underway. And I'd like to see that with some sort of news event that again is that reason to sell. All right, so that gives us quite a bit to look at the next couple of days. We should have a little bit more clarity on Thursday of what we're seeing today. As far as individual stocks, not a lot that I really want to cover today. We can go into the retail sector, and the Signet Jewelers, it's a 96 strength rank. SIG is a ticker symbol. What jumped out to me is just kind of the triangle formation. It's kind of forming right here. It looks like it's getting ready to break out. If it breaks out to the upside, that would be bullish for the stock. If it breaks to the downside, you'd want to kind of wait. It still could drop down into, there's a little bit of horizontal support right into here. It could pull back to and still move up. But if it does drop lower, what I'd be worried about is if it breaks to the lower part of this trend line, then you have to worry about kind of a bearish head and shoulders pattern that might be forming. So I'd want to see it break to the upside. Let me switch this over to signals too. And that's usually what you'd be waiting for too, is that it's go to that buy signal. But I think if it broke this trend line, went below it, I might just walk away from the SING for now, just because I'd be a little bit concerned that's creating maybe that bearish head and shoulders pattern there. But if it breaks out to the upside, so it breaks this trend line here, and I'd probably add if it could break, maybe not necessarily to that extreme high, but at least up these highs right through here, or even right through here. If it can get up above some of that, be much more likely it could continue to go higher. Another one I liked is, I went under the buy section right here, and L brands, LB, went to a hold signal today. It's kind of in this sideways range. Very similar to what we're seeing the market index is doing. So I think this would follow what the market indexes. If they break out, go higher, and this breaks out and goes higher, it could be an opportunity there. It's kind of interesting that I noticed, when I don't watch I kind of skim the post-market shows on CNBC. I just don't have time. You got to realize that one of the things that one of the income generators for CNBC is to have interviews with people. Pay them, CEOs pay, or companies pay CNBC to do interviews, so they could put out good news about their companies, or build their brand as a company, or build their brand as a CEO. Even sometimes it's selfish reasons that they do this, but a lot of that information, for the most part, is worthless. You're never going to see a CEO come on CNBC and say, yeah, I really don't like our quarter, and I think we're going to have a worse quarter this time than last time, and we're really sucking it up right now. You're never going to hear what's really going on. They're always going to paint the best picture they can. Even if the company's garbage, they're going to find some way to paint it to where it smells a little bit sweet. So to me, it's a waste of time. And Jim Cramer has some good ideas throughout his show sometimes, and sometimes you can pick out some areas that you maybe didn't notice before, or he draws your attention to. But the interviews, you skim over that stuff. It's a waste of time to go through those day after day after day. But what I thought was interesting is yesterday in his show, he pulled up a bunch of retail stocks that, he pulled up a bunch of stocks he felt like could kind of take off and had room to run. And I noticed that a lot of them were in, our retail sectors right at the top of the list. So it's already showing that retail is outperforming the other sectors out there in the economy right now, based on the software. And then if you go into the buy section, some of these stocks that he was talking about, L Brands was one. It's at the top, near the top in the buy section of the scan. Restoration Hardware was one. American Eagle Outfitters was one, and Gap was one. So, the software was already showing that strength. And it's showing other stocks that are in here that maybe he's missing. So, not that I need Jim Cramer's approval for anything, but I thought that was something I wanted to point out in the update, was just how effective the software is. If you trust the software and know how to read what the software is showing you, it's put you in front of the strongest stocks in the strongest sectors, and that's really all you can control as a trend trader. A lot of times, it's just try to make sure you're putting the probabilities in your favor. All right, I'm going to jump into the trading today. We're going to go over some more of those scans again. These are going to be more of the fundamental scans, which is not my strength. But I'm going to kind of read to you the definition of the scan. Really, what I'm trying to point out is those of you that are fundamental traders are already going to recognize some of the stuff that I'm going to be pointing out, and you might say, "Oh boy, that's me. That's what I love, and that's going to be the perfect scan for me." I don't use a lot of these just because I'm more of a technical trader. Now, the argument can be made, well, Jerry, why don't you find really strong fundamental companies that have really strong charts? And that seems like the easy solution to everything, right? Good fundamental companies, good uptrending charts. You should never lose, right? You should always win. Well, that's not always the case. Some of the best trades I've gotten into were on companies that fundamentally were pretty terrible, but they were starting to turn things around, and the charts were showing that they were turning things around. And by the time you found out by the time they started to have the good fundamentals, they were nearing the end of their trend. A lot of investors and traders are anticipatory. I mean, they're looking, they're trying to predict the future, and they're trading based on their future predictions. And that's why it doesn't make sense sometimes when you find great fundamental companies and they're in downtrends. Like, why is that happening? Well, because some investor out there anticipated that rise, they traded that rise, and now they're selling, they're getting out, and they're selling to a lot of times to pure fundamental traders that aren't looking at the charts. And now again, I'm not trying to badmouth fundamental trading, and maybe that's sounding like I am, but the problem is when you combine the two, you have to decide where you're going to lean. Meaning, I can combine good fundamental companies with the chart, but when push comes to shove, what am I going to trust? Am I going to if the chart starts breaking down, am I going to trust the chart and go with the chart, or am I going to say, forget the chart, the fundamentals are there, I'm going with the fundamentals? You have to decide, because if you flip flop on this, if one time you're going to go with the chart and trust the chart, another time you're going to trust the fundamentals, you're really going to be a messed up trader, because you just have no foundation in your decision-making process, and you'll be all over the place. So that's kind of my argument with, you almost are one or the other. And early on, when I tried to combine the two, I decided I was much better at chart reading than I was at numbers and reading the numbers. And that's where my main focus went. So that's kind of sets up the training today. This is not going to be my area of strength, but at least it could be yours. And I want to make sure that if these are tools that you can really benefit from and want to benefit from, that you know that they are there. Let's go into the screener. And last week we talked about last week we introduced the sector, or introduced these scans, the 21 scans. This happened to me last week as well. Hold on. Here we go. All right, we have the 21 scans right here. And I went over, last week I went over mostly kind of the technical ones that I tend to use. I'm going to go over the fundamental ones here. There's a lot of them. There's 21 of them. There are a few other technical ones. I might go over some of these on Thursday, because I want to spend a little bit of time on these. That's the purpose of doing a training, just to make sure you're kind of aware of what they are and what they're looking for. I didn't get a chance to go over all of them on all the technical ones on last Thursday. All right, the first fundamental scan would be this quarterly sales growth. Let's click on that. By the way, when you click on the scan, it'll also show you how many stocks it's pulling up off of that scan. And that's why we have it ranked a lot of times in by strength rank, is that you may not want to sift through all 262 stocks. You're probably going to want to focus on the ones near the top of the list. Or some of the scans may not pull up anything at all. And that's telling you it's just not finding anything that particular day of what you're looking for. I think there's one of those scans that didn't pull up any, it didn't have any stocks in it. This scan is looking for quarterly sales growth that's greater than the quarterly earnings per share growth. and that the sales growth is 20% or greater. The idea here is that the sales are what runs the business. If you have a sharp increase in sales that's greater than the earnings per share, it could be an indicator of expanding growth. The company is starting to grow. Now, again, that every one of these is going to be a positive or very bullish type of scan, but this is where I would look at the chart. And by the way, again, you can set this up to where I'm going to switch this off of signals here. If you can set it to where you can skim through these scans, if you click this little drop down menu right here and go down to 21 scans, and then find the one we're looking at, which is the quarterly sales growth, 20%. This one right here. So when I look at the chart of MARA, I see a nice uptrend through here. It did go to a higher high right here, higher low. Then what do I see? It's had to move down. It failed to rally, or tried to rally, failed. Went to a lower low, and this lower low right here also took out this low. So it broke the uptrend, and then it's kind of stagnated as it's tried to rally back up. And then today it's looking like it's starting to move lower, so it's already given us a lower low. So from a chart perspective, it's showing a trend reversal. This is showing a downtrend right now. Okay, so this is what I was talking about before. Based on that particular scan, it was trying to put me in front of a company that's that could be growing. The sales are growing faster than its earnings per share, but the chart is as of right now is not showing me something I want to jump into just yet. And so I've got to make a decision. Do I go with a fundamental reason for getting in the company, or go with the chart? And that's me personally. I would go with the chart here and say I'm going to skip over this one. There's 200 something stocks in here, so maybe there's one in there that has this criteria, but is in a stronger uptrend. And by the way, this is why I'm not really bad mapping the fundamental part of this either. Is that the same thing happens with the technical scans. All these technical scans that we go through. What am I looking for? Well, I want the chart to kind of match what the scan criteria is given. The scan is trying to put me in front of companies that are outperforming or doing really well for some reason or another. Is the actual chart pattern I'm seeing a reason for me to get in? That's why when we do the stock specific class, I'm not just jumping into just 98 strength rank with a hold signal. I want to see if the chart pattern is also there. BLNK, again, I love trading this company on the way up. It kind of broke that uptrend. It's got a little bit of a head and shoulders formation right here. It worries me. Skipping over this one for now. NVIS, we actually had this one in a stock specific class back here before it broke out. It was showing up here, and it had this big sharp move up, and it's had this big sharp move down. That's never a good sign when you have impulsive up, impulsive down. Remember, stair step. When you're stair stepping up, you have impulsive and then corrective. Impulsive, corrective tends to be more choppy, more sideways. Impulsive, corrective. When you get back-to-back impulsive moves in the opposite direction, it can very often signal a trend reversal. You get impulsive up, impulsive down, and then you start corrective. Now you're in a downtrend. When you get impulsive down and then impulsive up, that could be a bullish possible trend reversal. That looks like a bearish trend reversal, so I'd steer clear of that one. This one actually looks pretty good. NTZ, you've got, might rephrase that here, but you have this consolidation through here, and it broke out, and then it's kind of pulled back to it. So it used to be resistance. It used to be the ceiling back here, is now the floor. It's come back. Now, the problem I have with this one, though, is you see a stock that's moved sideways. There's a lot of indecision for a long time through here. Then couldn't decide where it wanted to go. Then it breaks out, which is a good sign. But when I see a breakout after a long consolidation like that, I want this thing to take off and go. Not that it has to go straight up, but I want it to pull up and then maybe pull back a little bit and then take off again. Instead, what have we seen? It's come back to the same level here, and it's moving sideways again. I don't know if I'm going to be in this thing for 4 months, 4 or 5 months, just for the possibility it breaks out again to another high. So I would take that into consideration in my decision-making process there. This one's in a downtrend. This one looks pretty good. It broke out. Looks like it's stair-stepping up right here. Broke out to a new high. It's pulled back a little bit. I'd want this to I would, retrace a little bit, but I want to start moving back up again. And this is where you could, let's see what signal it has. Oh, it still has a buy signal there, so it's not like you could wait for it to go to hold to buy. It's probably pretty close to a hold, though. It could pull back a little bit further there. Now, remember, stocks can tend to retrace about 50% of the moves. So technically, after this strong move up right here, this thing could drop down. There's a little bit of resistance here, so probably around in this area right here. That'd be almost 50%, a little bit, maybe a little bit less than 50% of this move up. But if it hold right there, this thing could, the overall trend still looks like you have a larger stair step here that seems to be looking pretty good. That's CLDX. Anyway, so let's move to another one here. Let's go to return on equity greater than year change right here. I think this was the one here. Let's look at return on equity year change. Yeah, so this one didn't find it. So what is this one? Return on equity is considered a measure of how effectively management is using a company's assets to create profits. If that is increasing faster than the stock price, the price will usually catch up or try to catch up. Well, this, based on this scan, it didn't pull up any stocks as of right now that fit that criteria. So obviously we're going to move on from that one. Next one is QEPS greater than ROE, right here. And this one is showing 442 stocks. So I'm probably going to just stick with a few at the top of this one, but this is the current quarter earnings per share is greater than the return on equity. Basically, the price is basically market capitalization, or the market value of the equity per se, while the true equity is what's shown in the balance sheet in the actual numbers. So that's just looking for companies where that market capitalization is kind of maybe showing a little bit greater value than the what's showing on the books, actual books there. So anyway, that's the kind of the criteria there. If I go through the scan on this, some of these are in pretty decent uptrends. This is an OTC stock though, so I'm going to skip over that one. I don't want this to freeze up on me here. Looks like, let's see here. I'm just hoping it didn't freeze up. Here's DAC was on there. Nice uptrend. is on the far right side of the extreme reversal risk, though, so that'd be something to keep an eye on. And I'm wondering if maybe it's slowing up because there's so many stocks in that screener. Let's move on to the next one here. Let's go to this week, 5%, month greater than 30% here. This one only has 14 stocks in it. This is looking for the stocks that are on a roll have a monthly return greater than 30% and a weekly return greater than 30%. These are strong stocks and could be starting new trends. This one's not too bad. I don't like the way it traded today, but it came off of this little corrective move right here, had a nice strong move up. Looks like it's retracing a little bit. Well, some of these are selling. This had a big sell-off today. Nice strong uptrend, and then getting hammered today on that move. Well, there are stocks that could be starting new moves, or some of these are jumping up quite a bit. Although I have a tough time buying into some of those moves when it's on that far extreme reversal risk. But there are some people that love to buy into that kind of strength. A lot of these are showing, they did show really big moves here. Here, this one's kind of pulled back a little bit. SBLK. All right, let's go back here. Here's a 5% dividend. For those of you that like dividend stocks, these are stocks that are $2 or greater, have a strength rank of 30 or greater, and pay a 5% dividend or better, and have a current buy signal. So if you're chasing the dividend, you can look for some of these stocks. Actually, some of these are perfect. You'd like to see some move higher, but a lot of these high dividend paying stocks don't move very much because most of the time people are in them just for the dividend. But this one's kind of broken out a little bit right here. So again, you have a bullish pattern and paying a high dividend. Here's one right here. It's nice, had a nice move up. It's been kind of consolidating. Starting to kind of break out right through here. LLIT. All right, let's go to another one here. Book value is greater than the last price. This is looking for stocks that are trading below their book value. Remember, book value is if you were to take the company, sell off all its assets, what would the company be, and then divide that by the amount of shares out there, what would be your return? If the price is below that, it's basically trading below its breakup value, meaning a company is, could be really undervalued. The problem, though, sometimes is, you have to ask yourself, why is it trading below book value? There could be a number of reasons that are warning signs about that. But if you're patient enough on some groups, a lot of the bank stocks. I remember Citigroup a few years ago. A lot of bank stocks were trading below their book value, and you've seen the run that bank stocks have had, particularly over the last year. They were undervalued, and now they're kind of trying to catch up to what they should be valued at. Have a little bit of premium on the value, not just their book value, and so there could be some opportunities there with this type of scan. Let's take a look at one of the top ones in here. Yeah, this is had a little bit of a consolidation to here, and it's starting to break out. Now, this is an OTC stock though, so I don't know. You might not be able to find that one on your brokerage account. All right, I got to speed things up here. Let's look at this annual earning per share 20, EPS 20, sales 20, huge quarter sales 20. This has 58 stocks in it. And this is looking for stocks that have an annual earnings per share, quarterly earnings per share, and quarterly sales all over 20%. These stocks have a share price of $1 or better, a rank of 1 or better, and average daily volume of 20,000 shares or better. And I thought we already looked. We found this one before. CLDX was in one of the earlier scans. We had looked at this one because it was breaking out. Pull back a little bit. All right, let's go to the next one. This is annual EPS 100. Stocks have increased their earnings per share by over 100% year over year. This one has 605 scans in there, or stocks in there. You probably aren't going to be going through all those. If you don't see these scans under your screener, you probably need to get it added to your software. You just contact the office. They can let you know what you need to do to get that added. Now this one had, Kirtland's was one we've featured in the stock specific class a few times. U2 Holdings is one that we featured in the stock specific Big Five. I think we did Riot as well at one time. So these are stocks that have been on some of these stocks have been on our radar for a while. And you're going to get that stocks that show up in different types of scans. That's what I'm saying. Some of these are going to be, you're going to recognize it because this is right down your alley of what you look for. If you're a fundamental trader, some of these you're really going to get excited about. I apologize if I'm not showing the same enthusiasm, but it's just personally not my thing. So. EPS last quarter 50 right here. This is stocks that have increased earnings per share over the last quarter by 50% or greater. Kirtland's is in there again. Riot. Some of these are still in the same scan there. Just a couple more here, and then we'll wrap things up. But ROE 50 down here. This is return on equity is usually measuring how effectively management is using the company's assets to create profits. And so these are stocks where that return on equity is pretty high. Let's see here. 50% sales growth, 50% earnings per share growth. Stocks that have increased both sales and earnings per share by 50% or more in the last quarter. This is showing about 117 stocks. There's not too many in there, but you're seeing some of the same ones. There's Riot. EQ, we pointed out in a stock specific class a while back. I like plug power, but I don't, the chart I have it. There's L brands right there. We covered that one today. I haven't liked, some of the EV electric vehicle stocks have been kind of in downtrends recently. I'm expecting that to reverse at some point, but we might need a little bit of a market pullback first before you start seeing money move back into those. And you want to see a little bit more risk appetite by the professional traders to go back into those. All right, last one here. PE is less than the annual growth. PE ratios used by investors and analysts to determine the relative value of a company's shares in an apples-to-apples comparison. This scan looks for stocks that have annual earnings per share growth greater than the PE ratio and that have a PE of at least 1. And this is you got 500 stocks, 551 stocks in the scan. So this is definitely one you'd be focusing on the upper part of that list. There's Big Five right at the top. I like that one. HOV is a construction stock that's been on a tear. So again, getting back to what I was talking about in the beginning, you're finding some of these same stocks on different scans. So that's why I think it was important to bring that up in the beginning of the class, was that if you're more fundamentally geared, these are probably maybe more where your focus is going to be on finding your trades. If you're a little bit more technically geared, you're going to use a different approach, but you're probably going to be trading some of the same companies. But again, the important thing comes down to when push comes to shove, when the fundamentals in the chart disagree, where do you go with? What do you go with? And there may not be a right or wrong answer with that. I would have a tendency to say the chart is a better indication of where you should go. But I don't think Warren Buffett's much of a chart guy. I can't bash someone with his track record. So it's just different approaches. All right, thanks for letting. Sorry to run so late. Like I said, there's a couple other scans we'll go over that are more technically oriented. We'll do on Thursday, and then we're going to get into some specific candlestick training starting next week. Have a great week, everyone. See you on Thursday. Bye now.